Hi, today is Monday the 26th, and this is the weekly recap for the current trades. Last week or the week before, I closed July ahead of expiration for an okay profit of about $720. Fortunately, on the PM account, I'm using a 1.5 leverage, so it's equivalent to about $1,100, which is good for this month. August is not faring as well as July was. The market, I mean, if you remember from the previous cycles, I've been playing or betting on a return to a what would be a sweet spot. Now the market has been grinding up continuously, and the sweet spot is no longer an option. Now we are 25 DTE, and I'm just going to start releasing capital for the next trade. On this one of the last 2 weeks, I've done a couple of bullish risk reversals, basically rolling some CCS here and again here, 3875, 3900 to pay for the 3675, 3700. Now I do have my CCS on 4600. It's not 100% safe, but if we look at the IV skew on SPX, we see August, the IV skew is around 45.50, 45.60. It will move gradually closer to the money. So, I mean, I don't want to be playing with fire in this continuous, relentless grinding up market. So I will probably now have to start releasing the CCS. Now on September, we will look at it right now. And if I add an IC, which is a better way to pump up profit potential, I would probably have to go around above 4700 to get a safe CCS. So that's it for this one. So on this one, the trade is doing okay. It was almost $200. So of course it's suffering a little bit. And the reason is that we've got a strange, weird, or at least unusual configuration with the market going up, but volatility being sustained. So this negative Vega on this upside is not playing in my favor right now. Now I've got 3 CCS. They are worth about $60 or 0.6 here. So I will probably have to carry on doing bullish reversals. Last time I did roll, so just to get rid of the 45.75, and this time I will probably have to close one of the CCS and start paying for it with a PCS. Actual account is using 19.5k Reg T. And on the PM account, yes, this plus 10% is playing to my disadvantage, so I would probably have to, in terms of controlling margin or margin to equity, which for the prop trading firm I'm working for is about 35 to maximum 45% margin to equity ratio, something to look at. Not so much if you are Reg T. So yes, I will have to start reducing the call side. So I will probably close out this one here, and of course if I go for $70 or 0.7 here, I will add another 2.5k to my trade. Generally, I don't want to add capital this late in the trade. If I go for a PCS roll or a short put condor, I would have to pay another 20 cents here. So either I accept to have a little bit more capital. I'm not over capitalized right now, so that's something I can do for a week or two. So either PCS or PCS roll and getting rid of one CCS here and trying to preserve my profit line. If the market drops hard, that's still okay. I can definitely then buy PDS on the lower side of my trade to reduce capital. Let's not forget that I've got a capital reduction order that hasn't filled here, which I could maybe try and massage a bit, something like this, because at least it doesn't cost me much capital. I would not reduce the capital as drastically as I wanted to, but this is something that I can consider, and we'll take it from there. I think if the market reverses hard, it's actually quite important to start reducing capital. So on this one, it doesn't give much money. So I will probably go for that PCS roll and then carry on with my trade reduction of the next week. This is a very eventful week, so we have to be careful and reducing capital at the time where the trade is potentially more sensitive. By reducing my gamma, I also reduce risk with this trade. So now let's move on to August. August was entered last week. There's nothing much to say on this one. It was bought probably at the right time. Now it's losing a little bit, but I mean, it's not a train smash. I can certainly either go for what we would call a reverse Harvey or PCS on the upper longs, or maybe if I find that yes, this IV trough on September is okay, I would go for a iron condor. If I can still get about $1 above 4,700 or so, this is probably a good adjustment or add on to the trade. So either I put my PCS here or I put it a little bit lower to be on the safe side. So that would be something like this. With this, I get to about break even, waiting for the news to come later in the week. So that would be fairly safe. I'll reduce even my gamma here. My theta is going too small, so I can't really wait for the news or the reaction to earnings on this. So I can probably do that. And if the market decides to go much higher, I would then go for a typical reverse Harvey in a more RTT style. So this is what I intend to do. Probably today, since the volatility is actually pretty good, I would get here but probably around $4. Okay, 3.2. I think I need to go further up to get my $4. If I would need to put my PCS around here, and then I would get a higher boost on my trade. I would go for something fairly safe for now, and then act more decisively after the big earnings are out. Okay, that is it for now. I have started a new trade, and this is how it looks. I was bold enough to leave it, even though it passed the second peak, basically the calendar peak. It is maintaining its value because I'm playing on theta on my short leg of the calendar, but I should probably either close it or go for a diagonal on the calendar side, and the diagonal will probably cost a little bit, and I can also pull one up along here, and if I want to keep my capital pretty low, I would then do a short condor here instead of just a straight PCS. So that would be going for a CDS here, maybe something like this, and to reduce the capital, or I would maybe go for something like this as well. That being said, I want this trade to remain as simple with only a few adjustments going forward. So if I do this, that would be just to flatten delta. I'm not suffering from the strong positive vega here because volatility is holding, so I'm not saying this type of adjustment is suitable for all kinds of markets, but this is actually okay for now. And probably the best thing to do would be to close it at $600. As you can see, the P&L on capital is very good. So the alternative, instead of adjusting, is just to closing, and maybe in a few weeks start entering the same on September. Okay, that is it for now. I'm actually writing guidelines on this trade slowly but surely because it's still a very new trade to me. It's been inspired by Mark, and I thank him very much for this. This is actually a good looking trade, and I will probably do more low risk trades like this in the future. Okay, that was a bit of an aside. Thank you for watching. More detail on Slack. So if you're not on the Rhino Slack, please drop a message below and I will send you an invite. Thank you for watching, and bye for now.